All right, RTD Live Talk. We are live for a late night YouTube talk show. I'm excited to be back for another chit chat. And tonight we're going to talk about the banking situation because I think it's really important to begin putting together the pieces of the puzzle as they are revealed to us. And I think we're going to be able to really get down to the nitty gritty of how they may eventually transition us into that solely digital world as things become problematic in the days ahead. So, welcome to the live stream. My name is Mike, the host of RT Live Talk. As always, I want to cover a couple articles and then give you guys a chance to talk about whatever else is on your mind. And so feel free to call in when the phone lines are open and to talk about it. So earlier today, I had a chance of researching some of the banking news that's coming out. And of course, as we always talk about the current environment we're in now, everything is designed and functions around the banking sector. That's the heart and bread and butter of our economy because of the way the central banking model is set up. And so debt, no credit extension, no profit, more losses equals more panic, less confidence equals a populace that is very concerned with their funds today and tomorrow. Therefore, the likelihood of bank runs picking up here in the U.S. is very likely in the days ahead, as well as whatever the Federal Reserve decides to do with the continuous quantitative easing to provide liquidity as best they can. But you can't solve a debt problem with more debt without confidence being eroded. So it's going to be a matter of time before people want something tangible, which they think is theirs, that may or may not be available to them when it's time to go get it. So enough of that rant there. Let me check in via chat as well. Any new viewers, let me know where you're watching from, and I'll definitely acknowledge your presence there. And so I was actually, I'll play this because I was listening to this song earlier as I was researching the banks. And so let me know if you guys can hear this. But I just thought this was very timely, that the Federal Reserve is active. Jerome Powell is about to really crank up the printing press, the digital ledgers, and you name it. And so currency is what the world's about to be flooded with. So, all right, enough of that. Let's get down to business. All right, here. So I got a couple articles. I'm going to just thumb through them. I was trying to lay out somewhat of a framework as to how I'm going to put all this together, but I'll just roll with it as it comes. And then, of course, get your 2 cents on it and feel free to add in at any time. I would love to get some insight on top of it. And so Philman got a quick question. It says, what are your thoughts about Apple being worth $2 trillion? Okay, so my personal opinion is that at this current point, as of today, consumer confidence report came out today. Consumer confidence dipped below the initial March crash. And so once again, with consumer confidence low, large unemployment, a lot of restaurants closed, a lot of retailers closed, a lot of housing, not quite sure who is actually investing in Apple to that magnitude other than the so-called Robinhood traders. But yet we know that the asset bubble of the equities markets has been inflated by all those lending windows and the opportunity at borrowing right now at zero cost. So no doubt it's all a part of the design. Not quite sure who actually out here buying it other than speculating with it. And so in my personal opinion, as I always mentioned before, investing, as we've known prior to the great financial crisis of 0809, is no longer in existence. Right now, everything is basically gambling, i.e. trading, and betting on the fact that you can get in and get out in a timely fashion to make a profit. And so the concept of buying and holding for the long run, those individuals who do such will be the ones end up taking the losses. So not surprised at Apple being $2 trillion. I think last year it was $1 trillion. So $1 trillion in 1 year, how does that work out? Where do those funds come from? I know I didn't buy any Apple shares. I don't even like iPhone. So that's just my 2 cents there. All right. Okay, here. So let me get into the game. Okay, so what I want to talk about today, and I thought this was very timely because, outside of the U.S., there's more information being given about the banking situation. And here in the U.S., we've been given this narrative that the banking sector is strong. Even the FDIC is out once again within the last couple of months announcing that the banks are safe. You can put your money into smaller commercial banks or whatnot. So they went from March where they're talking about, don't worry, the FDIC's never lost any funds, yada, yada, yada. And so even in this article here, I'm going to show you in a second, the chairwoman for the FDIC is out once again, publicly acknowledging that the banks are strong, don't worry about it, funds are safe, da 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 da. So once again, when they continue to overemphasize that funds are there, everything is safe, no need to be concerned, to me is a red flag that perhaps you should really now begin taking this matter a little bit more serious if you have not. And then as well, for those that tuning in, you are aware, but a lot of your family and friends have no clue. And when you start to put the pieces together, you realize that they're telling you that because they do not want you to be concerned so that you can go down and start questioning what's going on. And so here's an article that I want to touch on briefly. A couple nuggets worth talking about it here. And so it says here, bank profits slump 70%. Okay, as the virus rakes businesses and households. Okay, so once again, throw the virus on top of this, and it makes it sound like, okay, that's why everything is down. But I got a graph here that shows the opposite of that. But if I just thumb through this article here briefly and give you some highlights here, it talks about here. It says the total bank profits across 5,066 insured institutions were 18 billion compared to 62 billion last year. This was the second consecutive quarter of steep profit declines as banks set aside billions to cover potentially bad loans back in April. Okay, so one thing that really stood out to me was bad loans. And so there's a concept that is quite apparent in Europe, and it's called the NPLs, or non-performing loans. And so non-performing loans are exactly what it said. They're not performing. And so imagine over the last 10 years of 0% interest rates, amount of debt that was taken out, corporate, whatever, corporate, private, public, you name it. And all those debt loans that were taken out fallen into this non-performing loan category. And because non-performing loans are also factored into the real estate sector, commercial mortgage-backed securities, retail, we got the restaurant side, we got real estate, we have what else out there? It's a couple other things I'm gonna touch on in a minute. So let me acknowledge the super chat here. Barlight Broker says, do not buy a big gold chain. I'm trying a different strategy. Okay, Barlight Broker, let me know what the strategy is, what you got in mind. Let me know. I'm curious to find out that. Okay. And so this right here, they've set aside billions to cover potentially bad loans. Okay, back in April. And so think about the current environment we're in now. Month by month, more news is coming out about the amount of defaults, delinquencies, and you name it. And so here's another article here that really shines a light as to how bad things really are. So this is from Mish or Wolf Richter, Mish Shedlock, whatever. And it talks about commercial mortgage-backed securities. And so malls. And so this right here is a very detailed article, but yet it talks about the amounts of hundreds of millions of dollars that are being lost right now. And of course, Carl Icahn, a billionaire investor, is shorting all of those mall closures and making a profit. But your average person can't really do that. So here we have detailed numbers as to the amount of malls that are being closed. So here's some numbers here. It says the value of Crossgates Mall, the collateral for the loan, was slashed by 40% from 470 million. It was established back in 2012 to 281 million right now. And it goes on and on and on, talking about the hundreds of millions of retail stores. They give all types of names in here, brick and mortar, that's basically just defaulting, saying we can't open our stores, we're not going to pay this debt. And so all these loans always go back towards the financial institutions, i.e. the big banks. And so once again, all these loans are packaged as someone's asset. And so there's that give and take there. So the banks bracing for impact, as I mentioned a week or two ago, equates to more non-performing loans. And then that right there will result in more pressure on banks when it comes to credit extension or lack thereof. So what can we expect? The Federal Reserve, of course, this Thursday is going to make some announcements talking about how inflation, whatever. So inflation will be the cover-up for their way of trying to put more liquidity into the sector. Of course, they got the lending windows, you know about that. And so as the banking nightmare continues to unravel, what does that mean for you and I? That spells eventually a lack of confidence and concern for deposits. And so for those that might be tuning in and those that may not be aware, I'm going to actually play for you that initial story that was provided to us. So here's that back in March. I had to go find this up. So this is March 24th, the day after the reserve restrictions was removed off the too big to fail banks primarily, so that they could start making some available funds to cover these losses. And so here, for those that need a little fresh reminding, here we go. I'm gonna play this for you real quick. But listen to this here.
Market and the financial sector. This is what I would like you to take away from this. Your money is safe at the bank. We're living in unprecedented times. At a time of a pandemic like this, it is way too easy to get confused and to have fear about what you should be doing with your money in your accounts, especially as you're looking at the volatility in the stock market and the financial sector. This is what I would like you to take away from this. Your money is safe at the banks. The last thing you should be doing is pulling your money out of the banks now, thinking that it's going to be safer someplace else. You don't want to be walking around with large wads of cash, and you certainly don't want to be hoarding cash in your mattress. It didn't pan out well for so many people. And I will tell you this, no depositor has lost a penny of their insured deposits since 1933, when the FDIC was created. So if you're talking about having your money in a safe place, please keep it in an FDIC insured bank.
If you're talking about having your money insured, please keep it in the FDIC insured bank. Okay, so I played that just so people can be, be refreshed with what came out in March, which is very suspicious in nature. And so I actually want to go to another article here that I highlighted on the RTD website, and it has to do with this visual aid right here. And so here, this is a visual aid. I thought it was very timely, very interesting. And so it says another tough quarter. And so the FDIC came out today with the quarterly report showing the bank profit losses, of which you just got heard by 70% down. But yet, just looking at this graph here, if you look at the downward spiral of potential losses or banking issues that were underway, it happened initially in Q3 of last year is when something happened. And of course, we all know what that something is. It was the whole repo market debacle that happened behind the scenes where quantitative easing officially began. But yet, as of Q3 last year, there was something that was happening, which happened to be in the beginning of September, which led to a downward spiral of, as I said here, tough quarters. And so we started off the year with major issues. And so once again, Jerome Powell has done a good job of covering up how this year started out in January, where they were talking about by April, they were going to be cutting back on quantitative easing, or wasn't called quantitative easing. It was called the repo market liquidity pool, or whatever it was called, that by April it was going to stop. But of course, we know what happened in March, that where we're at now, to the point where profits are down, losses are up, confidence is being lost. Therefore, what does that equate to? Eventually, it's going to lead to some type of bank. It's going to be one bank of some kind in the U.S. that has some issues, and then that would lead to a domino effect of more banks. But then again, I'm going to dial back right here with this last little bit of information here. And so it talks about, it says, meanwhile, the FDIC continues to report huge deposit inflows at banks, with total balances increasing by 1.2 trillion from the first quarter of 2020. So CARES Act created a lot of currency. Currency was given to people, it was deposited in banks, increased the deposits of banks. Okay. Deposit inflows have been so strong, the FDIC reported that the reserve ratios of the agencies has fallen below its legal minimum, which is 1.39%. So taking into consideration all of the assets in the commercial bank, which I'll show you right here real quickly. And so as of right here, total assets in commercial banks at that point was getting up to $20 trillion. And so since April 22nd, there's been some type of funds taken out, set aside as it dwindles down here, to where now we're in a point where some of those assets that they have on their balance sheet is being used to cover these losses. So imagine if the Federal Reserve don't step in pretty soon, then there's going to be some issues with that. But what wraps it up here, it says, this is that young lady I was just referring to the video. She says, I want to emphasize that the fund has more money than any time in the FDIC's history. Okay, so think about that. The fund has more currency than any time in FDIC's history. And that sounds confident, but when you consider the amount of debt and the amount of liabilities on the Federal Reserve, on the commercial banks' balance sheets, it is also at probably a 20 to 30 times increase as well. So, once again, with the 1.39% reserve ratio, which means that the FDIC requires banks only have access to or have set aside a minimum of 1.39%. That's what the FDIC covers out of 20 trillion is nothing at all. It's pennies in the bucket. And so she said, and the reduction in the reserve ratio was solely a result of the unprecedented increase in bank deposits. And so it talks about a 1.4 billion increase in the fund, pushed the balance sheet to $114.7 billion of what they're sitting on out of 20 trillion worth of assets. So, okay, so that's enough there. So reason I laid that out was because the banking sector is having some major issues. They're being very tight on the amount of currency they're lending, and therefore confidence will be lost eventually, and there will lead to bank runs. And so what will happen when there's bank runs in the U.S., the moment that maybe one or two banks start to have issues, then what we can expect at that point is some type of announcement where the Dodd-Frank kicks in, and then they activate that emergency policy that's in the Dodd-Frank Act, which will then lead to bail-ins. And then what happens when bail-ins happen? So right now, there's bail-ins in China, there's bail-ins in India, there's bail-ins in every other country that's also having issues right now. And so what's going to be different about this current bail-in is the fact that along with bailing in, they have already pretty much set into order what they're going to do to issue equity or another currency back to the depositors. So this is an older article here, but it's making headlines these days. But JP Morgan starts customer trials of JPM coin crypto. And so this is an older article, but yet it's well underway now. And so it was good to say they're not the only bank. So JP Morgan, the JPM coin is what, so why would you need a coin at the same time we have paper notes as well as Federal Reserve digital ledger balance, on your balance sheet? That lets me know that these coins will probably be issued as equity, i.e. Replacement for your bailed-in reserves or funds. It's going to be probably issued out in either a bank crypto directly or in some other type of fund from the digital dollar aspect. So, all right, there we go. In a nutshell, that is just my 2 cents there on the fact that bank losses leads to lack of confidence, which then leads to bank runs, which will lead to a bail-in that will then lead to a equity share in your deposit, which will be going to come in the form of a crypto of some kind. So, okay, that's all she wrote. All right, so with that being the case, let me stop ranting. Let me open up the phone lines. I just want to lay that out there for you guys. So if you came late, you might have to go back and watch that to get the full take on that. But I think within there, of course, there's no time frame to all that. But it's good to say that's what the script is playing out to look like. Now we'll see if there's enough time to actually execute all that. So, all right, let's talk. Hello, caller. What's your name? Where you calling from?
Hey, how you doing, Mike? Been a while. Steven, Milwaukee.
Steven, Milwaukee. How you doing, my friend? What's on your mind tonight? Talk to me.
I'm doing good. Listen, I went and made myself a tinfoil cap since we're running short on tinfoil. And I just wanted to put this out there.
Go ahead.
I really think that we should keep an eye on September 11th to 2020.
Okay.
All right. Now, it depends on how you do your math, how you want to do your math.
Mm-hmm.
But we're approaching the 20th anniversary of 9/11. Now, you remember it was on a $20 bill. They showed us how to make an airplane that showed us how the Twin Towers collapsed, which were the World Trade Centers.
Mm-hmm.
This is what my spidey senses are telling me. Now,
okay.
I'm just a regular dude, but my spidey senses are telling me that we should keep our eyes close to 9/11 because the games that these people are playing, they're so evident. They're just playing this game so wide open.
Mm-hmm.
They're doing things, and it's going over everybody's head so fast because so many things are happening so fast.
Mm-hmm.
I think that we can expect some type of new excuse, possibly a cyber attack, okay? That would be another excuse to have a financial reset. All right? Now, that's just the tinfoil talking.
Yeah.
I just, when I take the tinfoil hat off, I'm a regular dude. I eat oatmeal. So I'm just saying, I really strongly believe that this is going to happen much faster than people anticipate.
Mm-hmm.
And it's going to catch people unawares is really what's happening.
Yeah.
Because people are still sleeping.
Yeah.
So I just wanted to add my 3 cents, and I wish you well. I love you, brother.
All right, my man. Appreciate you. Thanks for the comment. All right.
Thank you.
All right. So, of course, that's an interesting perspective there. I appreciate those thoughts there. September 11th, definitely. September itself, it usually is a questionable time frame for the equities as well as the precious metals. And so, one of the things that I've heard a lot of commentators talk about is the whole COMEX situation. It's September, beginning of September is delivery month. And so we'll see. There's a high demand for silver, but the supply is not abundantly plentiful. And so that right there could be an issue where September is going to be a interesting month, but yet the 11th, I would never put it past those that's attempting to orchestrate this, transition to try to throw something in that time frame as well. Hello, caller. Where are you calling from?
Hi, this is Casey from Fort Worth.
Yes, sir. How you doing, my man? What's your thoughts on this banking situation or whatever else is on your mind?
The banking situation, I think I'll keep my eyes on Wells Fargo. I just read that they're about to fire a whole bunch of their people, and to me, Wells Fargo just kind of reminds me of Deutsche Bank. And I think a while back they got caught making up fake accounts.
Oh yeah.
And I think that was being used to prop up their how bad they're doing. So I would keep my eye on Wells Fargo, but at the same time, I hear there's a bank runs going on in Turkey, and they're selling everything they own just to buy gold.
Yeah. So that I do not doubt that at all. And that's one of those stories where I haven't got a chance to dive into that, but yet it's definitely possible. So there's a banking contagion in every country. It so happens that our mainstream media is doing a good job of trying to say that the banks are strong. When Jerome Powell talks about the banks are strong, nothing like 2008, and then we got the FDIC, president, chairwoman talking about be confident, don't worry about. Oh, okay, it's something that you should be concerned with. So you say Wells Fargo, okay, so I don't doubt it. Wells Fargo is a major liability, and it's my personal opinion that the last bank standing will be J.P. Morgan because they're sitting on the most silver. So I think Goldman Sachs, J.P. Morgan, it might come out on top of this last banking contagion, but we'll see how that plays out.
We'll just have to see, and like that last caller was saying, September 11th is coming, and they, it's just to them, it's all a game. It's to them, they love doing all this, setting up these certain events on certain equinoxes and certain things. And if you read the Bible, in the Revelation, it talks about the woman giving birth, that constellation. It points out that Jesus' birthday happened on 9/11, just their way of trying to mock him. And and we're just going to we're going to watch and pray and keep stay close to the Bible and stay close to and take care of our families. But
100%.
It's going to be interesting times coming up.
Yes, sir. I agree.
Elections coming, and I always tell myself the closer we get to the election, the more crazy it's going to get.
Yeah. Well, I agree, my friend. I appreciate your insights and your thoughts. Thanks for calling in.
Thank you.
Yep. All right. So another thing worth talking about is the fact that here we have Warren Buffett. And so, of course, that was a story I think 2 weeks ago. Warren Buffett buys, Barrick Gold. And so, of course, he didn't buy physical gold. He bought shares. He bought a derivative of gold, which happens to be in the mining sector, which, of course, mining always reflects, the actual price of gold on the ground. So that's probably a good bet on Buffett. So Buffett knows something going on because it also says he dumps bank shares. And so you typically don't dump a good portion of your portfolio on something that the system has been designed to make profitable for some time now, unless Buffett had the heads up that, he's going to make up on the gold side what he's going to lose on the banking side. So I guess Warren Buffett decided to let go of some banks. Also, just makes you something to worry about. So when Jerome Powell saying there's no concerns, Warren Buffett thinks something else. And then on top of that, Warren Buffett's index, where it measures the valuation of the equities markets, and as of right now, it's at an all-time high, which basically saying it's way overvalued. Therefore, whenever it gets to that price ratio aspect, it's time for a sell-off. So, Warren Buffett is not going to lose in the days ahead. He's going to make a killing, and he's sitting on large amounts of cash, as I mentioned many moon videos ago. Hello, caller. What's your name? Where you calling from?
How's it going?
I'm doing good, my friend. What's your name again? Brando Commando. How you doing, boss man? What are your thoughts on the banking nightmare or whatever else?
Oh man, so I've been trying to predict what's going to happen in the next couple of months myself, and everyone thinks September, October could be the time.
Mm-hmm.
So I've been trying to take a survey of how they think that the election is going to affect the stock market. I'm like on my toes. I don't know if I should be pulling my cash out or letting it ride, or what do you think?
Ah, man. Okay. So it's one of them things where I am anticipating some type of event, false flag, whatever you want to call it, between now and the time we're supposed to be able to vote. But what it will be, I don't know. I know the equity market is something that is continuously being pumped up, and I can see some type of gyration causing panic that could also trigger some high frequency trading sell-off type of things. Some algorithms and bots go crazy and sell into it, and all that stuff that happens in the midst of chaos. And so I do see something coming. I don't know what, but me personally is like, at the current point we're in now, unless you're a active trader and you know how to get in, get out, and take advantage of the manipulation, if you're a buy and hold type of guy, I personally just don't believe in that model anymore. So as it goes with the banking sector, only keep in what you're willing to lose in a worst case scenario is my personal opinion. So that's my thought there. Unless I'm actually knowing what I'm doing, getting in, getting out to speculate / gamble, I don't really believe in buying and hold unless I can actually hold it in a sense or have access to it right away.
Yeah, I don't know. I mean, like I said, I've been trying to take a survey, so there's a couple of people whose opinions I trust. And Greg Manarino is like, oh, this thing's going to the moon. They're going to pump the stock market like you couldn't believe.
Yeah. See, but also Greg is unique in the fact that he places bets in certain places that he feel it will be leading, like, trend-setting sectors. And so he's a trader. And so he's not a buy and hold type of guy. So he's basically shorting and betting against, corruption and chaos. So that particular method can make you some profit, of course. But to buy something because you believe in it now, 5, 10, 20 years from now, like, the retirees are told to do in their portfolios is I think is a major gamble. But Gregory Manarino way, he gets in, gets out, and he'll tell you when he's getting out. So that's trading. So.
Well, I told a lot of people say, like, those who have been shorting the market are getting killed.
Yeah, and so it's
there's
those.
There's no real reason for it to turn around.
Yeah.
Manarino's point of view is that the market has already pushed in a Biden victory,
Mm-hmm.
and if Biden wins, he's just going to jack up taxes and just give away free money. And the banks, the banks kind of select the president most
Mm-hmm.
times.
Mm-hmm.
So he's like, unless Trump throws these banks a bone, that they're just going to, kind of usher in Biden, and it's going to be easy money for Wall Street. They've already, kind of factored that into their pricing.
Yeah. Yeah. So with all that you shared there, say again.
A lot of people are expecting a crash. The Warren Buffett indicator, like you just mentioned,
Yeah.
he's like, oh, this market's topsy-turvy. There's no reason for it to be as high as it is. So, and then Joe Salente on Kitco the other day, he's like, oh, the election's going to have no effect on the stock market.
Yeah. Well, I mean, that's the thing. Like, it's so much commentators out there sharing their thoughts of 2 cents. Problem is, we know we are anticipating and expecting something. The problem is we don't know how bad and how long. And so, and that's the idea of trading and being a speculator. So it's there's a lot of reward, but there's also a lot of risk. So it's tricky, man. But as long as you're getting your weight up, at least you got some some insurance on the back end. That's definitely going to be a beneficiary of all this chaos as things unfold, I believe.
Very true, but I kind of like your point of view, where to expect a false flag to cause some gyrations and just scare the crap out of people, because when fear starts shaking, everyone just starts running and selling and doing crazy stuff.
Right, I agree. So hey, man, thanks for calling in, and I wish you the best, and definitely, do your thing, my friend. Appreciate you. Yep.
All right, peace, buddy.
Oh yeah, there we go, man. So it is what it is. Speculation is good until it's not. Very true. And so, yeah, man, and that's the benefits of being able to have a say or control what you do up front, but also the risk falls on you if it doesn't work out. So at the end of the day, we all know that this is a currency crisis. It's at the end of all this. So no matter what, the Federal Reserve note is your greatest financial liability in the long run. And so what you do between now and the time the Federal Reserve note is no longer fully accepted worldwide as a reserve currency, lies the opportunity. So, wish you guys the best. But other than that, worst case scenario, you know what to do. Get your weight up. All right. So what else is going on here? Let's talk a little bit more. Curious to find out what else is going on out there. So a lot of chaos, man. I saw somebody talk about. Let's talk about all of the issues that's going on socially. Like, of course, there's all the chaos in the streets. Of course, there's another murder by law enforcement. Of course, a lot of people are up in arms about that. And so with an event like that, I'm curious to find out what cop whatsoever would want that heat on themselves by going to those measures of firing and shooting and killing another individual that apparently, I didn't really watch the video much, but didn't have a weapon. That right there leads me to question why, unless it was an event that was supposed to happen. And once again, so here's another issue. Let me know by show of hands. I have not Googled it or even tried to talk about it, but the cops that were involved with George Floyd, I don't think it's been swept out of the news. So once again, apart from, in that particular area, in that precinct, in that city, in that county, news may not be coming out as to what happened with those officers, which once again is one of the things where they could actually got off or whatever, to where justice would not be served. And, we on to the next story now. So what else we got here, man? All right. I'm calling in now. Feel free to do, my friend. Phone lines are open. And what else we got here? Fake event. So, Wisconsin riots. I haven't really chimed into much other than that's just one of the many events. Rowdy's Yankee says Boston Market. I'm not familiar with that one. What's going on there? It says keep it simple, good physical, mental health. Yeah. Well, why my republic has gone global. It says Mike Fed Chairman Powell talks about monetary regime shift this Thursday. Yeah, and so we know the regime shift. It's going to be more of the inflation talk. That's their primary objective, to position themselves to meet their two objectives of unemployment, maximum employment, or maximum unemployment, and maximum inflation, borderline compound inflation, hyperinflation. So, yeah, they've done a good job of that. Look at the cost of living these days. Look at the pressure on families and households around the country. The Federal Reserve has done their job to drain the entire country of wealth through, i.e., time and labor. Let me see here. It says LBP is calling in. Okay, if he is, the phone line is not ringing, so I'll wait to hear. Here we go. Let me see here. Might have missed a phone call. Let me see. LBP got a couple phone lines out there hiding from creditors. Hello, Carlos. Where are you calling from?
Hey, what's going on, Mike? It's Miles from NY.
Miles from NY. What's going on, my man? Give me the situation on the banking or whatever else is on your mind.
You know what, man? The other night, I had to put on my villain shoes for a second, man, and think outside the box. Okay. Everybody is pricing in and expecting, the Feds to do certain things. But I just thought to myself, what if everybody came back with a vacation and they did not approve another stimulus? No more unemployment. No any of that stuff. What would be the ramifications of that? How would that affect the markets and mainstream in general? And I'm beginning to think, man, what better way to pinch and squeeze every last asset and everything else out of the common folk as they begin to sell everything off out of desperation. Lock them down maybe one more time, commit to flu season, and I'd definitely squeeze everything else out of people. I just like to know your take on it, man. Could you see that as a possibility? I don't see any reason why that they would prolong or wait this long, even if election was coming up, because they still got $1.8 trillion in the TGA. That they could just get the nod on, but he's sitting on it.
Yeah.
They're all waiting. What are they waiting for? It's
all
like
right.
starving somebody else. And I think it's a RopeaDope. It's a real trick to get people all pumped up and hyped up and stored out. I think they all went on vacation now to tie up their loose ends, to sew up their loose ends, get those getaway secret cabins ready, get those offshore all sold up and cleaned out and did whatever they had to do. So when they come back and they announce, listen, we can't get a deal going, and the riots start, and they come for their heads, they can make a clean break. Yeah. But listen, man, I ain't gonna hold you up. I'll let her know what you think, man. Keep doing what you do. And one more thing, man, is they're not announcing when you come on. You know, if they do, it's late. So, you know, you guys get the thumbs up, man, so you keep it going.
Yeah,
right, man,
appreciate you. Yeah, be good. All right, so great point there. And so actually, you know, I was going to talk about that tonight as well. And so worst case scenario, so over the past weekend, apparently Nancy Pelosi called in everybody off of vacation, whatever it's called, and they actually proposed that Postal Service bill of $25 billion, I think, and they voted on it in the past, and so it's sitting there again. And so it's this portion of what was in the HEROES Act that didn't get passed. And so here's the thing: I'm of the mindset that the Democrats' left-right paradigm is going to play tit for tat back and forth because they don't want to. They don't want this thing to operate and flow smoothly. They want as much turbulence between now and the election as possible to disrupt the narrative of the economy is recovering. And so it'll help Biden, it'll help Kamala Harris and all those people out there who have painted Republicans, as the quote has said, you know, enemies of the state. And so I think they probably meant enemies of the deep state. But anyway, and so President Trump has had 1.8 trillion. So a part of the CARES Act, some of the merger of the Treasury and the Fed working together allowed them to put 1.8 billion in the reserve. So this is what it looks like here on the screen. And so as you guys can see here, there has never been a current currency surplus on deck at the Treasury until the great financial crisis happened. And a lot of this stuff here was as a result of the tit for tat government shutdown. They needed, you know, some emergency funds to get through the week as they were not able to extend the debt ceiling. And so that was the tit for tat for the last umpteen years. So ever since President Trump became president in 2016, the whole debt issuance and the difficulty that they've made it to pass certain bills and to pay certain bills has resulted in more currency being put in the Treasury as an emergency measure. So there's an emergency account of currency. And so as of this last crisis here, it was at 390 billion. And so it went from 390 to 1.8 trillion within a couple of weeks as a result of the CARES Act. And so my personal opinion is that Trump, who's already using some of this, as we can tell here, this has been used. So I'd imagine this is probably some of the relief that's going out to states and some things that they've made available to as a part of that past executive order. So long story short, Trump is aware of the fact that there will be no there'll be no help from the other side to provide help and aid and relief to the public. So this 1.8 billion, I think, is something he might use on his own. Now, the question is, those executive orders that were put out there for unemployment of $300 in the match or whatever, state, whatever all the other 2 or 3 things that were included in that will not reach the public fast enough. So I wouldn't be surprised that some type of emergency measure. Steve Mnuchin comes out on a Sunday night saying that we need to interject, we need to put funds directly into the American public's hands. And so I authorize the Treasury to work with the IRS to deposit stimulus directly into your accounts on Monday morning. So remember, the stimulus is not being talked about, that $1,200. And then Trump was quoted as saying that he will be willing to give a little bit more. So don't sleep on the fact the funds are there. They got 1.6 trillion sitting aside for usage. And so here's a guarantee I can put out there. President Trump will not go into November not having used a good portion of that 1.6. So with that being the case, I can imagine if the markets tank, if they try to pull the plug on something, as long as the internet's working, he's going to try to send some funds out directly. He's not going to wait for the Republicans and Democrats to come together and agree on how much to provide an aid, because if he does not provide aid between now and November, he will lose a good portion of any potential swing states or any type of people on the fence, because their pockets will tell them to vote for Biden. So that's just my 2 cents there. But yeah. All right. Got a call here, and we will keep the party rolling. Hello, caller. What's the name? Where you calling from?
Mike, Tony from Oakland. How you doing,
TB,
bro?
how you doing, my man? I'm doing good. What are your thoughts on the banking or whatever else?
I just think you need to we all need to chip in by low blood pressure a phone, man. Because he keeps saying he's calling in and we don't hear from him.
And so watch this. I saw in my rant there, I missed 1 or 2 calls, so he could have been in there. So I'm gonna stay on there so I can make sure I get him. And I'm gonna start calling you, low blood. I'm just gonna call you right up, say, "Hey man, I got you." But anyway, go ahead. What's your about?
We'll give him a pass. He's probably putting the kids to bed. On the stimulus, there ain't no money, man. There's only one state that got the funds, and everybody else is SOL. We broke.
Yeah, and so we're broke in the grander scheme of things, but there's still some currency, there's still some digital funds sitting on a Treasury's account balance sheet ledger here, which to me is like their way of saying that we can at least give you something.
Of the last stimulus package, they only had like almost 900 million left over, and there wasn't much of that. But everything I'm reading, everything I'm hearing is that even though Trump signed the executive order, when that money went out, it only went out to one state. That's after everybody else gets their cut. You know that. Everybody's got to get theirs off the top, and then they get whatever's left to us. Yeah. And from what I'm hearing, there's nothing. And so if there's nothing, there won't be anything.
Yeah. And that's a concern. But I would imagine, you know, if Trump really wants to get a second term, he probably took that into consideration. And
now you and I know that the Republicans go in and mess it up and tear it up, and then they allow a Democrat to go in and try to spend more money to clean it up. That's happened every time. Yeah. And so that's going to happen this time. Trump don't want this position, man. Not now. Why would you want something that's falling? I want to tear some stuff up. That's what they do. I mean, this is the playbook that they have. And nobody has any money. If you know, there's only $2 trillion of actual money. Yeah. Everything else is credit that we got to pay for. Yeah. So they can write the check again if they want. Yeah. But guess who's going to pay for it?
The people in the long run. The lack of purchase power.
You're exactly right. And about that shooting, man, I advise everybody to use their critical thinking. Take the emotion out of it and look into it for what it actually is and see what it is. I mean, you know, just think of it from the cop's point of view. Are you going to let me get in my car? Nope. Right. What am I for? You're there for a domestic dispute. Right. Okay, then how did the dude that breaks everything up get shot? Come on, man.
Yeah, and so hey, so
the only time and now they got Black Lives at the same place. They got Black Lives Matter there. I don't think they ever left. And now you got Black Lives Matter. And the only time I see Black Lives Matter is when a white cop shoots a black kid. Yeah, that's very true. They ain't preaching about this new system they got set up at school, which makes the black and the brown less educated. Yeah. Whew. Yeah. That's sad. It is, man. All right, brother. I'm gonna let you get in. Appreciate you. Good stuff. Low blood pressure. I said hi.
All right, I will do so. Be good. Bye. All right. Oh man. All right. So give me a call, man. A couple more minutes. We're gonna get ready to dial back. So yeah, that's what it is, man. I am not surprised to say the least. Let me see here. We got a call here. Let me get this one on here. Hello, caller. What's your name? Where you calling from?
Hey, Mike. This is Sean from Albany, New York.
Sean from Albany, New York. What's in your mind, my friend? The banking situation or whatever else?
Okay, so now the group of people who protested about 2 weeks back said they were going to go to Churchill Downs on 9/5 because they wanted justice for Brianna Kessler, and they said they're going to hit people in the pockets. I think that's the false flag day. It's kind of tinfoil hattish, but a television series called Mr. Robot on USA Network. It's got Chris Slater in it, and basically they do a cyber attack, and they break down the whole financial system on 5/9, which is May 9th. But if you flip that backwards, it's 9/5, the same day these people are supposed to go hit people in the pocket on Churchill Downs. And that kind of coincides with all the 6 things you keep saying, like 6 feet back, $600 stimulus, football players, or football stadium having people 6 rows back. That's 6 days before September 11th.
Yeah. Okay. So that's interesting, man. Like, so, Yeah. Okay. And so I haven't heard about that. I haven't paid much attention to it, but yet, anything's possible, man. So it's just interesting how we can put together dates and times and go backwards, add, subtract, and be able to pull stuff out like that, man. So that's interesting, man. Appreciate that.
I watch a lot of YouTube, so.
Hey, man, I appreciate your insights and definitely putting a different spin on it. So thank you for sharing that.
You got it, Mike. Have a good night.
Yeah, you too. Yeah, man. And so 9-5. So we got 9-11, 9-5. So any minute now, just be prepared for, anything between now and say when it happens, whatever that time frame is. But all right, so I'm taking one last call. Then we're going to dial back. So if I don't get to everybody, I apologize, but definitely want to keep these a little bit shorter as we move forward. And I'll do less ranting and let you guys talk more. Hello, caller. Which name are you calling from?
Low blood pressure from Corpus Christi. Finally got through.
There we go. What's up, my man? What's on your mind tonight, man? So Tony Blaylock said what up to you too.
I said what's up to Tony from Oakland.
What's going on in your neck of the woods, man?
Hey, Mike, what's gonna happen Thursday? All the talk of the town and something exciting is gonna happen on Thursday. What's going on with the Fed? What are they gonna say?
They're going to say something favorable for the markets, and so we'll probably reach an all-time high in everything that hasn't already hit an all-time high. More than likely. It's going to be something that the market will respond favorably to. So as of now, as we witness, there's no such thing as bad news. So everything is good for the market. So what can he say that's not this bad? So we'll see. He might be able to say something, but I don't think so because it's his responsibility to keep the bubble inflated.
Well, they say now the Fed has a new responsibility. Now it's not only keeping jobs, stabilizing inflation. Now they want to be in charge of the money. Now they want to be your banker too.
Yeah, the Fed accounts now. It's coming, man. So I don't think they're gonna announce that, but it's in the works. And and I think the banking situation, as I was talking about earlier, man, is a great catalyst to usher in that digital dollar, or there, as I mentioned, after the bail-in process, having the too big to fail banks issue equity in the form of their coins or whatnot, their crypto coins or whatever they're going to be called. So digital dollars or coins are coming hands down. It's no way around it.
Yeah, but I don't know. You see, so they're going to make that Fed coin, but all these states already made gold and silver legal tender. So they're going to have a situation on their hands. I don't know who's going to win it out. Yeah. I say gold.
Gold is it's the bankers, central banks form of money. We all know that, and silver, the people's money. No matter what, there's more potential, more upside in silver, I think, long term, because of the ratio aspect. And so, a lot of people said a 1-to-1 ratio. We'll see, but silver has been heavily suppressed. Therefore, when it gives, it's going to give, I believe. So, if you got either one of them, you're going to do better off than having just pieces of paper.
Yeah, you got that right. Let me just say one more thing about this cryptocurrency.
Yeah.
I don't hear too much about it anymore. But look, Mike, look what I could do. If I was smarter, I probably can't do it. But anyways, you can make a Bitcoin just identical to Bitcoin. Mm-hmm. You copy everything exactly identical, mm-hmm. and just call it Bitcoin. And how are you going to know the difference between one or the other, And you could be replicated. But try doing that with gold or silver. I don't think there's a machine yet that can do that.
Yeah, that is interesting. So, yeah, I don't know the process of that, and so that's something I'm gonna definitely check into, because I would imagine you can probably fool a couple of people and have people buy into BTC and give it the same logo and everything like that. But of course, it not be the same one, and it can probably get some traction. I don't know how that works. I'd imagine they probably got something built into the code where people can distinguish between. I don't know, but that's a good point there. The ease of yeah.
Yeah, you just make it identical, Mike. You just make it the same type. You got to be really, really smart and know about that stuff. But you can duplicate it. Just like there's already so many coins. You change the name and make it. But the people are gonna say, utility. You know how they talk.
Yeah.
Garbage.
Now watch this. Journey Moore in the comments says they fake gold and silver every day. So also, because of the demand and the hype of the media for gold and silver, you better imagine that there's more fakes out here like never before as well. So that is also something because it is in demand. And so there will be more fakes out there than it's imaginable. So be careful.
Yeah.
Because
just leave you with one thought, Mike.
Yeah.
Like the people say, well, you need energy to mine Bitcoin. You need energy and electricity. Try making splitting an atom. Making from like protons, and we can add electrons and subtract electrons. To make matter.
Yeah.
So try doing that with gold. See how much electricity it takes to do that. Then they come talk to me.
Yeah. All right, man. I appreciate you, man. Good to hear your voice.
All right, man. Have a good night.
You're good. All right, man. Everybody's been great hanging out. Appreciate you for joining me. And as always, man, we know what to do. Stay heavy, stay prayed up, and stay attentive to what's going on, and try to stay ahead of the curve as best we can. That's what we do here, talking about putting the pieces of the puzzle together. And in the midst of all this, trying to keep a good sense of humor about everything. And so definitely smile, because God is in control. He's on the throne, and those that are in Christ ultimately win. So don't forget that. And so with that being the case, that's all she wrote for me. I want to make sure I bring to your attention an opportunity to get a report on the dollar from my people over at Portfolio Wealth Global. And so I'll put that link in the description below if anybody interested in some educational reading that can give you some nuggets on how to position yourself a little bit better. And with that being the case, people, that's all she wrote for the night. Looking forward to being back tomorrow night, Lord willing. I'm going to leave you with my intro as my outro. See you guys later.